it's about that mindset. It's about seeing trading as being a numbers game and trying to work the numbers in your favor. And it's not about being able to read the market and pick the exact moment, time in to get into the market and read the conditions and always pick the right exit.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome to the Two Traders Podcast. How are you today, Darren?
I'm good, thanks, Walter.
Cool. So we have this question from a listener, and the question is, I'm still too attached to single trades instead of having a focus on the bigger picture. And this leads to bad decision when managing my trades, like cutting winners short. So what should this trader do? I have some ideas, Darren, but I'm interested in your thoughts.
Yeah, I completely get where this trade is coming from. It's something that I used to do all the time, and you need to kind of get a way of reframing your results. And something that's worked for me is I use a piece of software that catalogs all my trades for me, and then I can go to it and see what my results were week on week, what my results were month on month. I can compare this year to last year, and all of that information is available at the click of a button for me. And whenever I'm kind of having a bad, whenever I can feel myself being affected by a few losses, a couple of trades, I will go to that and I'll say, okay, so let's say I've had a bad week so far. I'll go to that and look how I've done for the year so far, and just put it into perspective. So let's say I've lost 100 pips already and it's only Tuesday. I'll go to my results this year so far and I'll see, well, I'm still 2,000 pips up for the year. So it's not significant. And it's just reframing those losses in the bigger picture. And, don't necessarily have to use that. And then to sort of go along with that, I've got, a target for the year, how much I'd like to, or how much I feel I should achieve through the year based on my testing and how I've traded before. And I'll also have weekly targets and monthly targets. And so I can always reframe any series or even single losses and put them in perspective of a bigger picture. And it's called reframing, and it's a really good. There are other ways of doing it, but that's my way of reframing losses, and it works really well for me.
Do you use historical data as well? So, for example, let's say you're trading a system that you've been trading for the last 5 years. Do you look back and say, well, over the last 5 years, I've seen a drawdown or something like this, 7 times, so it's not really unusual. Do you do things like that, or is it always sort of is the background always sort of the overall gain versus this little blip?
No, I do exactly that. So if I've had a really bad week and it feels like it's significant and there's something wrong, I'll go back and see if there's been how many times I've had a similar bad week, and again, put it in perspective. Okay, I get 4 or 5 of these every 6 months or every year, so it's nothing unusual. It's just normal market behavior. It's my system playing out, and again, it reframes it for me. One that I do always like to refer other traders to, if they perhaps haven't got a lot of their own data, is the composite fund, is it? The trend trader that's been going like 40 years, and there's we should post a link in here, and he's been going 40 years and he routinely has 20%, 25% drawdowns, but he consistently makes profit year in, year out, and all of his results are available online. So I'm sure that whenever he's in one of those I'm sure he doesn't have to reframe it anymore, but the data is there for him to be able to, go back and see, well, this isn't unusual, this is part of my system, it's not significant, so I should just, persevere, and it will come out good in the end.
Yeah, that's great. I'd love to see that link. I haven't seen that, so that's the other thing I would say is you can anticipate these. And I know this might sound a little bit weird to some people, but and I'll post a link in the show notes here for you to play around with this. But we know, like, the same statistics that we use to build bridges and skyscrapers and things like that, you can use those numbers to highlight the likelihood that your system is going to have a drawdown of X%. So let's say it's 20%. Let's say you think if you lose 20%, if you build up your account and it's up to 500,000 euros, and then now all of a sudden you're down 100,000 euros, which is 20%, you're going to start to freak out. Okay, so how do you avoid that? Well, the easiest way to figure this out is to go through, run your numbers, and you're going to need your win rate, your reward to risk ratio, and the amount of risk that you have on each trade. So now, obviously, you're probably not going to be able to change your win rate, and you're probably not going to be able to change your reward to risk ratio unless you do something drastic with your exits. If you keep everything the same, the only thing you really have control over is what you're going to risk per trade. So by adjusting that upward or downward on the calculator that's posted in the show notes for this episode, you can see what is likely to occur. So you might find out that you have a 95% chance of that 20% drawdown. But if you reduce your risk by a third, you might find that 95% chance of a 20% drawdown falls to 13% chance. Something like that. So these are things that you can do to play around with. And I know some people are probably listening going, yeah, well, that's just statistics. You never know what's going to happen in real life. And that's true, because it's probably more likely that the chances are slightly higher than are anticipated using that calculator. That's probably true, because we know that we have these black swan events every few years rather than every 500 years. So that's true. But the more important point here is, if you can anticipate these and you can adjust your risk and sort of decrease the likelihood of something like that happening, then the next question I have for you is, what are you going to do about it? So if you know, for example, you've got a 33% chance of a 20% drawdown, and you know that if you've been trading for 4 years and then you hit this 20% drawdown, you've built your account up quite a bit. Let's say that you're not really making routine withdrawals, then it's going to hurt. So what are you going to do about it? Are you going to close down and say, well, the system doesn't work anymore, the market's changed? Or are you going to change your system and say, well, I got to adjust this because something screwy is happening? Or are you going to say, well, this is the drawdown that I anticipated. Now I'm going to take 2 weeks out. I'm going to get away from the charts. I'm not going to take any trades. I'm going to do my back testing. I'm going to build up my confidence again, and I'm going to jump back in the game. These are the sorts of things that you need to consider long before this happens, because when we make up the rules after it happens in the midst of a serious drawdown, that's when I think mistakes are made. And I know you probably don't agree with everything, Darren, that I just said, but I'd be interested to hear sort of what your thoughts are in regards to anticipating and then dealing with the dreaded drawdown.
No, I agree with what you're saying. It's not how I go about it, but that doesn't mean that it's wrong. It's just your technique of dealing with it. I feel that you're kind of pushing at the fact that generally traders will perhaps be looking at the positives too much and then trade too much size, and then those individual trades can throw you off because you're expecting to go straight into a winning streak and you've gone into too large a position and you're uncomfortable with that drawdown. Is that kind of what you're...
Well, yeah. Obviously, one of the common things that happens in trading, and all you have to do is have a look at some of the forums out there and see. One of the earliest things that you'll ever come across is the martingale method, which is, I've had a loser, so I'll double my risk on my next trade and so forth. And that just feeds into the gambler's fallacy. Gambler's fallacy being, of course, that the trade that I just took has some bearing on the next trade I'm going to take, which, of course, is not true. They're completely independent. So some traders, that's sort of their mode of operating. They know that they've had a drawdown. They've had 7 losers in a row, and so that means that the next trade, the 8th trade, is more likely to be a winner or whatever. And really, the number that we know is the win rate. So if your win rate's 60%, the next trade isn't more likely to be a winner. It's 60% likely to be a winner, just as the last 7 trades were, provided, of course, that you're following your system. Now, I guess my concern for traders who get into drawdowns is that they're going to throw a profitable trading system they work so hard on to validate and build their confidence into the scrap heap because it's had a drawdown, or even worse, they say the market's changed. So, for example, as we record this, and it doesn't really matter when we record this, but there is some news in the markets now about the pound, and so the pound's jumping around like a Mexican jumping bean, and it's throwing a lot of traders into a bit of a fit because they don't know what to do. And so my question is, for these traders who've been trading the pound for a long time, does this mean that your system doesn't work anymore? Does this mean that the market's totally changed and that you should find something different? What does this mean? I think it just means you're in a drawdown. And I think it's probably, maybe it's the worst drawdown that traders have seen trading the pound in X number of years, but I think that's really all it means. And I think that these systems, particularly the very simple systems, will still work on the pound in the future. It just happens to be a bad time to trade those systems now. I mean, that's really all I believe. And I think that the big trap for a lot of traders is to change your system or give up on your system and build something else from the ground up just because you're in a drawdown. And typically, yeah, that's because they're risking too much. Typically, what we look at is, this is what my equity curve could look like, and we don't look at those little dips along the way.
Yeah. I think we want that. We want that to get to that kind of, that place where we're, finally comfortable, and we're, even though we've done the testing and we like the system and the figures all look good, we kind of want to race to that point where we no longer have those doubts, and you think, right, this is it. I'm never going to have to change my system again. I'm happy with it, and we kind of want to rush to that point. And unfortunately, I think it takes, I don't know what the number is, but there's a certain amount of, you kind of have to go through a certain amount of pain before and stay resolute to get to that point. And I think when we start out, we're not prepared to go through that pain, and we'd rather start afresh and say, okay, well, that wasn't working out, I'll start again. How many trades is it? I don't know, but I really think that this notion of letting the numbers play out, especially with how the wins and the losses are distributed, regardless of your win rate, letting the numbers play out and seeing consistent profit over a long time, you kind of have to go through a pain barrier to get to that point. And I think, again, with loss aversion, we find that really difficult and uncomfortable to do as humans, especially when we're trying to make our income, support our family, and achieve all the things that we want financially out of what we're doing as well. And it's very difficult to do. I think journaling and keeping a record of your trades really helps. And I know I wasted months, if not years, of time by trying different things, not keeping records of what I had done, just basically being impatient and rushing things. And when I finally settled down and kind of stuck with something for any amount of time and kept decent records, then I could really put the strategy and what was working and what I was doing right and wrong into some sort of perspective, and then really make some progress with my consistency. So it's natural to feel bad from a single trade. I tell you, first trade of the week nearly is, I've got a 50% win rate. First trade of the week is nearly always a loser for me, and it still is painful, and you still get those feelings rushed through you that, maybe I should start on the next bar, or maybe I should wait until London Open, and suddenly all these insignificant things kind of come into your mind. But with the course of time and with more trades, you just get better at dealing with those things and seeing them for what they are, which is really just, loss aversion, fear and pain and, emotional response to having something negative happen.
Yeah. And if you're having this issue of focusing on single trades instead of focusing on the big picture, maybe one way is to change your base. So instead of basing your decisions or your focus on one trade, focus on chunks of trades. Look at the next 20 trades. So ask yourself this question: do my next 20 trades fit with my system? If I have a 60% win rate, do I have 12 winners, right, over the next 20 trades? And then the next 20 trades, is my reward to risk ratio, so that way you're just moving the line further down the horizon so that you're not tempted to change things just because that's the road to madness. We've all been there, right? Where you have, the last trade didn't go that far and I didn't reach my target, and so it came back and it was a loser. So next time I'll take profit early, right? And of course the next trade not only hits your target, so you get out before it hits your target, you don't make as much money, and then it goes another, 50% in your direction quite easily. So these are the sorts of things that it just leads you down the road to crazy town, and you don't want to do that. What you want to do instead is look at the bigger picture, look at chunks of trades, look at 20, 30 trades, and that's another way to do it. If you really want to study these things and make sure that everything's, if you're a new trader and you've only just recently gone live, then do that. Look at whether your win rate's holding true over 20 or 30 trades, and do it like that instead of changing everything because the last 5 trades weren't so good. That might be one way around it. So so those are my thoughts on this idea of, how do I focus on the big picture when these individual trades are affecting me so much? Do you have any sort of closing thoughts on this, Darren?
Well, I'm 100% in agreement with what you just said, because that's how that sums up how I see trading. Trading is, for me, a numbers game, and it's not a case of you pull in a good trader and you say, right, pick a winning trade and pick a winning exit, and he'll be able to do that. That's not what good traders do. Good traders can trade over a long period of time, and a lot of trades, and they'll have good periods and bad periods, but over the long run they'll make more than they lose. And it's about that mindset. It's about seeing trading as being a numbers game and trying to work the numbers in your favor. And it's not about being able to read the market and pick the exact time in to get into the market and read the conditions and always pick the right exit. To an element, it can be about that, but if you think that it's solely about learning that skill, then you're kind of missing the easiest way that there is to make money, and that is by letting the numbers play out in your favor.
Absolutely, Darren. I appreciate the time, Darren, and looking forward to hearing from you in the next episode.
Okay, well, see you soon, mate.
See you soon. Bye.